First tick on the Nifty is in the red, but it's a flat start, you would say. It's been a very ranged morning.
Really is the day for mid-caps because that is an index which is outperforming the benchmarks with gains of 0.3%.
The markets are not going boom, boom. They are quiet, absolutely quiet. 10, 15, 20 point change since the morning.
In terms of market capitalization, we hit the 300 lakh crore mark today, so quite a momentous session. For the Nifty as well, for what it's worth, we will get a close above the 19,400 mark. So slow and steady, it's already a 400-point rally from the time that we conquered peak 19K.
Hello and welcome to Markets Today, the show we track around 6 hours of the day's trading action in just 5 headlines. I'm Nigel D'Souza. Here are the headlines for the day. Records continue to tumble on the Wall Street as India's equity market capitalization crosses 300 lakh crore rupees for the first time. Sensex and the Nifty end flat after a range-bound session. IDC begins the process of hiving off its hotel business. The conglomerate is exploring alternate structures in line with industry dynamics. Sources say a separate listing for hotel business is being considered. That's an exclusive. The HDFC twins slip on the first update of merged operations, with the new HDFC Bank reporting a tepid pace of growth on a sequential basis, and advances growth on a standalone basis coming in at multi-quarter low. Samvardhan Motherson gains on inking a deal to buy 81% in a Honda arm for euros 170 million, while Genus Power $2 billion platform deal and capital raise from GIC Singapore powers up the stock. But Strides Pharma, well, it skids on sale of its unit to Sinjin. Dixon Technologies stumbles 3% on a downgrade call coming in from Jefferies, while Colgate gains close to 5% as Nuvuma sets significant room to expand penetration. Well, here's what we have lined up on the show for you. It's a power-packed one as always. In market opinion, we have Rahul Arora, Chief Executive Officer at Nirmal Bang Institutional Equities. In big voices, we have Jitendra Agarwal, the Joint Managing Director at Genus Power Infrastructures, and Samvardhana Motherson International CFO, Mr. Kunal Malani, as well as the Director, Laksh Vaman Segal. They'll be as well commenting on the show. Well, straight to the day's trading action. Then records continue to tumble on the Wall Street after India's market capitalization hit record levels, crossing a whopping 300 lakh crore rupees for the first time. Despite a range-bound session, the Nifty and the mid-cap index posted a record close. The Sensex ended flat with a slight negative bias. However, the Nifty Bank index underperformed the blue chips. Prashant Nair joins us to wrap up the day's trading action. Prashant?
Well, the market just refuses to stay down. We had a 10, 20 odd point lower kind of day for bulk of the session today. And guess what? Towards the end, between 3 and 3:30, I mean, things perked up. We ended above 19,400 levels, a 10-point higher close. But the point is, we didn't end lower. So it's been quite incredible. Banks maybe a little bit more mixed there. The index ended lower. The Bank Nifty, I'll get to constituents in just a while. Broader markets, no such problems. Mid-caps and small-cap indices both ending 0.5% and 0.75% in the green. A lot of action in bike companies, right? Bajaj and Hero both revealed pricing over the last 2 days. Bajaj today for their respective premium bikes, and Eicher was the one which hurt. Once again, Eicher is down almost 10% in 2 sessions flat. Maruti was the other auto name which did very well. It crossed all-time highs, the 10,000 rupee mark, all the way after December 2017. Divis did well, and so did HDFC Life. HDFC Twins, Bank and Limited were the big drags, and that's the reason why the Bank Nifty, and it put pressure on the Nifty as well on a whole. Broader gains, lots of names. Genus Power, marquee deal with the Government of Singapore entity GIC. We had the management with us in the morning. Lots of takeaways. Market liked it. BHEL, Motherson Sumi, MRPL, Chennai Petro, the standalone refiners, Colgate, Karnataka Bank, Bombay Dyeing, Ahluwalia Contractors, Repco, Century Textiles, Bombay Dyeing, and so many others which went up on volume. Some losers, but largely pullbacks after very strong runs. There was Dixon, there was a downgrade, Bandhan Bank, Suzlon, Strides, and a few more. As I said, we've had another positive close, 10 points up, but positive, above 19,400. US was shut when we came in this morning. We will have US trading, and we get the FOMC minutes out of the US session. We'll see if that helps at the margin or maybe introduces some amount of caution here. Back to you.
Thanks a lot for that, Prashant. Well, in market opinion, Rahul Arora, Chief Executive Officer at Nirmal Bang Institutional Equities, said he is more inclined towards public sector banks than private sector. He also bets big on HDFC's merged entity. Let's hear him out.
I think there is still a trade left in PSU Banks from a valuation standpoint, predominantly SBI and Bank of Baroda, which reported their highest ever return on equity in the last quarter. I think their balance sheets are in excellent shape and neither of them are trading much beyond 1. I think a Bank of Baroda might be at 0.8. So I'd probably be inclined more towards public sectors than as opposed to private sector. But now that we know this new avatar is going to take shape very soon with the HDFC family, I'd probably stick my neck out and buy it. I think you have to keep in mind that at this base, if HDFC Bank is still giving you a 15% growth, you take it. I think if any opportunity you get to buy into names like Bajaj Finance or Chola, maybe, you know, the erstwhile HDFC, which was obviously now going to HDFC Bank, these will be buys for me at all points in time. As you approach 2024, you're going to see a bit of a slowdown in consumption going forward. On QSRs, like I've said in the past, I think Westlife has done a remarkable job. You look at the 2 years in the build-up to the pandemic period and the 18 months post, it's outperformed on same-store sales growth to any other company, including Jubilant FoodWorks, which is a delivery business.
Well, moving to the second headline now, a CNBC-TV18 exclusive. ITC has started the process of hiving off its hotel business. In a statement to CNBC-TV18, the company said it is exploring alternate structures for the business. ITC shares, well, they were buzzing in trade on the back of this development. Manglam joins us. He's the one who broke the story. He's filling us in with more details. Manglam?
Well, it may finally happen, and that's the word, that we get from our sources, that the ITC company has started the process of demerging or choosing alternate structures for their hotel business. It's been on the table for a very long time, and turns out that this time around it will be moved from the table and turn into actuality or reality as well. We understand from our sources that the ball has been set to roll. In fact, separate listing of the hotels division is one of the options that they are considering for alternate structures for their hotel business. And as of now, the hotel business is the only one which is under consideration for alternate structures and no other segments of the company. In fact, when we wrote to the company, they've said that alternate structures are being explored in line with industry dynamics. And we've seen the kind of dynamics that have been there for the hotel industry, the resurgence post-COVID itself. Perfect timing, perhaps, to unlock value in their hotel business. The stock has seen a big rally in the past. And in the past, Sanjeev Puri too has said in multiple interactions that alternate structures are on the table and it'll take a couple of quarters for fruition, and turns out the ball has been set to roll.
Thanks a lot for that, Mangla. Well, moving to the third headline now. The HDFC twins, they closed trade as the Nifty top losers today after gaining in that 5-session streak. Well, the merged entity also posted its first business update, with HDFC Bank posting a tepid pace on a quarter-to-quarter basis. Abhishek joins us to fill us in with the key numbers. Abhishek, take it away.
Well, HDFC Bank gave its provisional business update for Q1 FY24. The loan growth is weak on a sequential basis, and the overall picture suggests that the net interest margin could come under pressure on a sequential basis. Deposits are up for the merged entity, that is HDFC Bank and HDFC Limited, together by 16.2% YOY and about 1.2% sequentially. Loan growth is around 13% YOY and about 0.66% sequentially. Coming on to the standalone number of HDFC Bank, that is X of HDFC Limited, deposits have grown by 19.2% YOY and about 1.6% sequentially. The CASA is down by 2.75% quarter on quarter in an absolute value. So the CASA ratio is at 42.5% when compared to 44.4% in the previous quarter. This CASA ratio is at 11-quarter low. Advances growth is at 15.8% YOY and about 0.9% quarter on quarter. So the quarter on quarter growth rate of 0.9% is perhaps at 26-quarter low for HDFC Bank. CD ratio has declined to 84.45% versus 86.9% in the same quarter last year and about 85% in the previous quarter, which suggests that there could be pressure on the net interest margin as this CD ratio is at 12-quarter low. X of pool or the loans that they have given up to HDFC Limited, the loan growth is at 15.8% YOY and about 0.8% sequentially. Calculation shows that market share would have declined for HDFC Bank as a standalone entity on a sequential basis. Back to you.
Thanks a lot for that, Abhishek. Well, moving on then. Manipal Group has offered to invest 1,000 crore rupees into API Holdings, the parent company of Pharmacy. Sources have told CNBC-TV18 that existing investors of API Holding are expected to invest 1,500 crore rupees in the funding round. Nisha Podar joins us to fill us in with more details. Well, Nisha, what are you picking up from your sources?
That's right. It's a large fundraise exercise by PharmEasy's owner API Holdings. We do gather from sources with direct knowledge that Manipal Group, or the family office entity, has offered to pay 1,000 crore rupees, infuse it in API Holdings, and on a post-money basis, they could be owning a little over 18% stake in API Holdings. And backed by this bet that Manipal Group has taken on API Holdings, the whole host of existing shareholders of API Holdings have also agreed to infuse the remaining 1,500 crore rupees. So it's close to about 2,500 crore rupees being raised by API Holdings for debt repayment. Now, the most important aspect, and there are two of them. First, this debt repayment is extremely important for API Holdings, which is also the promoter of Thyrocare and had pledged 100% of the shares of Thyrocare to Goldman Sachs, and the breach of covenant can really lead to invoking of the pledged shares, and that's why this repayment is extremely important. And second, and the most important aspect of this deal could be a huge, massive markdown in terms of the valuations of API Holdings, which earlier was $2.8 billion. Now it's mere 6,000 crore rupees, at which the new fund will be given for its debt repayment obligations.
Thanks a lot for that, Nisha. Well, lots of activity in the automobile sector. Let's start with Maruti Suzuki, which has launched its most expensive car in India. Maruti Suzuki surged to record highs. The auto major has launched its multi-purpose vehicle called Invicto. This is another product being launched in partnership with Toyota. The starting price for the car will be just under 25 lakh rupees. It employs a hybrid petrol engine and is available in 3 variants. Danish Anand spoke to Maruti Suzuki's CEO to find out more.
So far, even without introducing the price, we are so much surprised to receive more than 6,000 bookings already in our hand. This is much bigger than our anticipation. So we are very happy with this situation.
Right. So since this is the first car which is priced over the rupees 20 lakh price bracket, so and if we compare this with the other Toyota car which is based on, so we are seeing that the car is a bit higher, highly priced. So what is the rationale behind this?
We do not think that the car is overly priced. When you see the products, the features, the specification and the performance, I think this car was that price level. And we are quite sure that customer will understand and accept.
How much more market share are you expecting in the MPV segment? And overall, do you think that after this launch, your overall market share will again, go up the 50% range?
Of course, we'd like to, go beyond 50% for the MPV segment. So we will see. If we are lucky, maybe we can go up.
All right, from cars to the battle of premium bikes. Bajaj Auto today launched their 2 400cc bikes called Speed and Scrambler in partnership with Triumph. The Speed 400 is priced at 2.33 lakh rupees. The first 10,000 customers will be paying 10,000 rupees less. Shares of Bajaj Auto, they rallied in trade, with analysts seeing the pricing as competitive. Shares of Eicher Motors, well, the maker of Royal Enfield, declined in trade. Bajaj is yet to reveal the price of the Scrambler. Parishit Luthra spoke to Mr. Rajiv Bajaj, who said the partnership with Triumph is about affordable aspiration. Bajaj also promised something special for the Pulsar this financial year.
The reason for the success of our partnership with KTM, which saw KTM go from 65,000 motorcycles a year in 2007 to becoming the #1 premium motorcycle in the world by volume now at over 300,000 motorcycles a year, is because we did not comply with this implicit assumption that you can either buy something that's affordable or something that is aspirational. What KTM Bajaj brought to the table, and if I may say so, then motivated TVS, BMW, and even Bajaj Triumph to come together, was to be able to offer affordable inspiration, let's say, or affordable aspiration to that customer. We have something very special in the works within this fiscal year, towards the end of it, hopefully. for those who absolutely love the Pulsar. The next big thing with the Pulsar. So we've done, I think, a reasonable job with the Triumphs.
Well, it's a treat for those who are looking at premium bikes. I'm one of them. So good options being put on the table. Let's see how this one plays out. For the time being, we'll slip into a short break. When you come back, we'll continue with the remainder of the headlines that we're tracking for you. Welcome back. You're still with us on Markets Today. Well, let's run you through the remainder of the headlines that we're tracking for you. That's the fourth headline today. Genius Power rallied over 17% on the back of the partnership with GIC. Both companies will together invest $2 billion to build a smart metering solution platform in which GIC will be holding 74% stake. Surbhi Sutaria joins us to fill us in with more details. Surbhi?
Thanks so much for that. So GIC and Genius Power will invest around $2 billion to build a smart metering solutions platform. Now, in this particular JV, GIC will hold 74% stake and Genius will hold 26%. Genius will be the exclusive supplier to this platform, and this platform will build for smart meter projects in India. Additionally, another GIC affiliate company is going to invest 520 crores in Genius Power for 15% stake through preference issue. Now, management joined us earlier, and they said that this 520 crores that comes through the preference issue will be used to build the platform. Also, Genius will come as a system integrator in the joint venture, whereas the GIC will be a financial investor, and 60 to 70% of the order value that the JV gets, that will come to the listed company, which is Genius Power. So that's why it's surging in trade today.
So these 590 crores will be primarily used for the AMISP platform. Genius comes as a system integrator. And when we come as a system integrator, a lot of our working capital is used for funding this particular joint venture or this particular JV. So GIC comes as a financial partner, Genius comes as a system integrator. We are definitely not open to diluting more. Meters are a very custom-built product, but if you take a benchmark price, that comes around 3,000 to 3,500 rupees per meter. So from the last quarter of this financial year, you will see a tremendous jump in the revenues. So I maintain the same guidance.
Well, that was a big stock of the day, Genius Power, ending high with a gain of close to 20%. Well, Strides Pharma Science, well, that plunged close to 5% after the company announced selling the multimodal manufacturing facility to Sinjin International for around 700 crore rupees. Ekta joins us to fill us in with a quick analysis on that. Ekta?
Thanks for that. Well, yes, the news is largely positive. While Sinjin is going to let go of around 700 odd crores, it is increasing its capacity. Maybe the street is worried about the change in terms of the facility that they will be acquiring from Stelis Biopharma, which is basically an arm of Strides. Now, just the news, they will be basically Stelis, which is the Biopharma CDMO arm of Strides, is going to be selling its Unit 3 multimodal facility for 702 crores or $86 million to Sinjin. Now, Sinjin is going to acquire the unit on a slump sale basis. The consideration is expected to be settled in cash. Transaction to close in around 90 odd days. Now, for Sinjin, maybe the worry is that the facility was initially built to manufacture COVID-19 vaccines. They will be investing an additional 100 crores now. This will be basically to repurpose the facility in order to manufacture monoclonal antibodies and to repurpose and revalidate the plant and help strengthen their position eventually in the CDMO business. So there is this transition period for Sinjin which they will have to go through, which we would probably take. There might be a gestation period in order to see the results from this particular plant. Now for Stelis, however, they're getting 700 crores in terms of cash. In Q4, the company had indicated that they are looking at strategic options for the company. The total amount of debt which was paid by the consolidated entity of the group was 720 crores in FY23, and they had indicated that they are confident of reducing the net debt to EBITDA to around 3x versus an exit of around 3.4 times in FY23. So this is probably going to help aid in terms of the total debt reduction. The company, Stelis, will continue to expand via 2 more units that they have, Unit 1 and Unit 2. And Unit 2 is also approved by other regulators such as the US FDA.
Thanks a lot for that, Ekta. Well, auto component maker Samvardhana Motherson rallied close to 6% after it announced acquiring Honda Motors arm, Yachiyo Industries' four-wheeler business. The CFO, Kunal Malani, says that they plan to acquire 81% of the four-wheeler business for around $170 million from Honda. He also adds that there could be more acquisitions in the pipeline. Let's listen in to what he had to tell us.
From a transaction structure perspective, first, after this announcement that we have done, we will be applying for antitrust approvals. Post that, Honda-san will be making a tender offer. They are already holding 50.4%. They will require to at least get 66.67 or 2/3 of the asset, and then they can take this asset private as per the Japanese regulations. Assuming they are able to take this private, they will then buy the two-wheeler business out of Yachiyo. And then what is remaining is the four-wheeler business, which we will then acquire 81% for, as I said, the 118 million euros from Honda-san. And Honda-san will retain the 19%. More acquisitions, yes, we've always had a pipeline, as we have mentioned again and again. I think the times are turning favorable for players like us, which have a stronger balance sheet. We are getting more and more traction from our OEMs to be able to offer more and more assets to us, and we look forward to doing more. From a revenue perspective, if you consider our Route 36 construct, we are at 12.7 today. SAS on a gross revenue will add 5 odd billion. Among the other transactions together with this is another billion, and then the organic growth on top. So maybe we'll be hitting somewhere between 19 to 20 odd billion already if you were to assimilate these transactions today.
Well, the fifth headline today then, Dixon Technologies fell close to 3% on the back of a downgrade call coming in from Jefferies. Now, the brokerage firm stated that weak demand is the key reason behind the downgrade. Surbhi Sutaria is here with further details. Surbhi?
So Jefferies has downgraded the stock to hold from a buy rating on Dixon Tech. They say that the risk reward now appears stretched, post the 55% rally that it has seen in the last 2 months. After the 55% rally, it currently trades at FY24 PE of 59 times, which is still 30% higher than the historical average. Now, 75% of Dixon's sales mix is from the OEM business, which has lower operating margins, which is close to in the range of 3 to 4%. And the EMS order book is highly influenced by the sales budgeting of the brand owners, that is the consumer companies. And with the current weak demand in the consumer companies, it poses a downside risk to the growth opportunities in their current order book as well. So that is why they've trimmed their EPS estimates by 2 to 4%, and they're estimating a 47% growth in the EPS CAGR in the next 3 years. So even if you look at, when you compare the valuations with the other EMS players, it is significantly higher than the other newly listed players who operate in the ODM space and have much higher valuations, like Keynes, Sirma, Avalon, who have a FY24 PE multiple of anywhere between 40 to 50, whereas Dixon is now trading at 60 times FY24 multiple.
Well, Colgate on the flip side gained close to around 5% on the back of a brokerage note coming in from Nuvoma. They believe that the company has significant room to expand product penetration. Manglam is back with us to fill us in with details of that report. Manglam?
Colgate is buzzing around in today's trading session, and we have a note coming in from Nuvama. They've read through the annual report of the company and the first annual report under the leadership of the new MD, Prabha Narasimhan, and they say that there is significant headroom for expanded penetration of both oral care as well as the adjuncts such as floss as well as mouthwash. The company has considered leveraging the high recall of Palmolive brand, which has 60 to 65% awareness. The product portfolio of the company also includes premium body wash and hand wash. More importantly, their Goa plant, which is a high-tech plant, has helped improve the batch cycle time by 25% and thereby increasing their capacity in that plant by 25% as well. But the macros for the Indian toothpaste consumption stay steady. India's toothpaste, per capita toothpaste consumption is nearly half of Philippines and 1/3 of Brazil itself. However, for Colgate itself, the big trigger will be any commentary coming in on their market share in the oral care business and products which the company will launch under the Palmolive brand from their global portfolio as well, as a result of which Nuvama has a hold rating on the stock with a target price a little over 1,700 rupees.
Thanks a lot for that, Manglam. Well, on that note, we'll wrap up on this edition of Markets Today. Thanks so much for watching.